reading from the article that is coming. That's what at least one financial expert is saying. Charles Brown of CB3 Financial says,
one of the brilliant moves that Kmart has done is to partnership with Facebook in these e-gift certificates, so you can actually...
Of government mismanagement. Charles Brown is the president of CB3 Financial Group. He joins us this morning from Chicago.
Significantly dropping. Basically, this is the year of the consumer.
Believe that they're capable of managing anything?
Well, it's sort of like handing the keys to the chicken coop to two wolves.
Good evening, everyone, live from Nashville. It's Thursday, March 4th. I'm Charles Brown, Portfolio Manager with CB3 Financial. We are so glad you are with us tonight. From COVID, U.S. politics, the world economy, and even market sell-offs to clarity, this is CB3 Live. Tonight's agenda, the J&J vaccine machine. Just a lot going on, a lot of positive stuff going on in the COVID world, and your questions answered. At near the end of last week's episode, I asked you guys some questions. You came back with a lot of answers, and most of them I'm going to cover tonight. Some of them I'm going to announce will be new segments in Season 2. We'll tell you more about that as the program develops. If you are new to the program, please subscribe to us on YouTube. Click the little button and then also click the little bell so that you get notified whenever we go live. It's always on Thursdays. At least it's been always on Thursdays, except for 5 this whole last year. And we also have a program on Monday night, but if we go live for any other reason you'll want to know, be sure to follow us on Twitter. Okay, I tweet every single day, sometimes twice a day. Also, you can see us on Facebook and LinkedIn. Okay, Corona America, what is the news tonight? I love seeing these charts going down. Most of the time we want charts going up, but when the data is going down for COVID, that's good. Weekly tests, just a little bit lower, but the weekly cases down 26%. Average weekly hospitalized down 17, weekly deaths down 20%. I'm going to start having a little less of this data as we move into the next season, 2 weeks from tonight, because I think the trajectory is moving in the right direction. And I'm going to be kind of assertive about some of my own personal opinions on COVID, which I have heretofore not done, but I'll do that as this segment wraps up. The big news, of course, is the third vaccination from Johnson & Johnson. Now, Johnson & Johnson, early in the COVID pandemic, came out with tests that became the benchmark, but they also were working on a vaccine, and now that has been introduced. What makes it different is it's a single shot, and it can be administered to anyone over the age of 18. They were granted emergency use since the last program. In fact, I announced this on Monday night's program. They have basically trucks setting out 2 days ago, going all over the country and delivering millions of doses. Now, in an interesting twist, the U.S. government has agreed to provide Merck, which is a competitor of Johnson, nearly $270 million to help Johnson produce the vaccine. So it's not their vaccine, but they are actually helping Johnson produce it. This is the kind of teamwork that I get real excited about in the American pharmaceutical industry, because it means, now granted, maybe Merck wouldn't have done it without this motivation, but to see more than one company involved in this, they join Pfizer and Moderna in getting the people on board here with as many vaccines as possible. I'm encouraged by this third vaccine. I hope you guys are as well. This is the kind of collaboration we saw during World War II when armaments, medical supplies, all kinds of things had to be shipped over to Europe and Japan. And we're seeing that now, and candidly, this pandemic is a pretty big deal along the lines of the severity to the country of both of those wars. So Johnson's going to be manufacturing 24/7 with the assistance of Merck. And I have this in red. I actually mentioned this on my Monday program. The Department of Defense will provide logistics support. What does that mean? There was actually an article in the Wall Street Journal likening this to a James Bond movie where guards get off and, they're guarding these shipments. Because when you think about it, you got an 18-wheeler truck with $75 million worth of vaccines on it. You got to have some protection from that. So again, I just like seeing this ramp up. I think it's good for America, good for Americans. I'm not going to go into a lot of detail on these next slides, but I just want you to know that I am reading on how the viruses are being combated by these various vaccines. I'll give you this data if you want it. I can put it in the description on Monday's program. If you want to know more about the logistics of how this works, how the DNA is involved, I've got that for the Johnson. I've got it for the Moderna vaccine here. You can see these nice little charts. There's actually some pretty good articles on the Wall Street Journal that I can pass on to you if you want to know more detail. But the news continues to be good, and I'm excited about that. Just mentioning again, making sure you heard me, that Merck is going to be working with Johnson together to produce this vaccine. So Merck is not going to try to issue their own vaccine. They're going to be helping Johnson. President Biden now thinks that we'll have enough for all American adults by the end of May. That's 2 months earlier than, just a few weeks ago. And part of that's because of the one-shot Johnson & Johnson vaccine. And that's just all good stuff, folks. 130 people will be vaccinated or have the vaccine available to them by the end of March, and then all of the country by the end of May. Okay, that's interesting in that you would think the market would be reacting positively to this, but that's in the next segment. We'll get there. So, good news from Johnson. Good news about the vaccine availability from 3 different companies now, and enough vaccines to cover 130 million Americans, which is way more than a third by the end of this month, and all Americans by the end of May. Now, at the same time, because of this news, Texas Governor Greg Abbott basically announced that on March 10th, all cities will be able to stop mandating masks. That doesn't mean that you have to go out. It just means that you can go out without a mask. Okay, now the Texas Health and Human Services is also authorized that if long-term care facilities need to do that, need to have masks, then they can. So, they're not just making a mandate that you have to take your mask off, but they are making it more possible. We're also seeing this, before I get to this slide, we're also seeing this in Mississippi, where Governor Tate Reeves also said that he's ending the mandate and that it's time. So I am going to speak up at this time. I think it's time too, folks, and I'm not alone in this. I just got this slide near the end of the day. 16 states with no mask mandates. Now, again, this doesn't mean that you have to go out. It just means that you can go out. I find it interesting that all these governors, you might see a commonality between all these governors. But I just think it's time. I really do. I know that this has been a horrible pandemic. It's not over, but the curve is coming down strongly enough that I really think it's time to get America reopened. You guys have wondered my opinion on this, and that is the first bit of news that I'm revealing to you tonight. It is time to open America. And if you're not comfortable going out, then don't go out. I get that. But it is time to reopen America. And the second decision is that I have definitely decided to get the vaccine. I'm waiting for the Pfizer to be available here in the Nashville area. I just turned 66, and it's supposed to be available for us, but there is a little bit of a waiting line. That's okay. I am going to get in line, and I will get the vaccine. Okay? So what is on your mind tonight, guys? I'm going to taper off a little bit on just asking a COVID question every single video. What's on your mind? Answer A. Will the vaccines work and get us back to a safe and healthy USA? B, will I be able to attend church this Easter and attend concerts this summer? I put this in here because the Moody Church in Chicago, where many of you know I'm still a member, even though I don't have the ability to attend, they are announcing they will be open for Easter services. Answer C, I'm much more focused on the markets in this current sell-off, which of course I'm going to address in this broadcast. And D, I'm just kind of overwhelmed by all this news. What's next? All right, I'm going to use the 20-second delay here from my presentation and see what's in the chat while you guys are answering. All right, Martha, Keith, good to see you, Keith. Debbie, good to see you, of course. Alice, Thomas, hey, Chris from Wheaton, good to see you, sir. Guys, this is the time too. If you have questions you want to ask, put them here in the chat box, okay? You don't have to just address the questions I have here. That's meant really to be a starting point. And in fact, I've got in front of me quite a few questions that came in this week. In fact, this has been the most prolific week of listener and viewer questions, and I'm going to address all of them tonight. So we will have time. What do we have here? We've got C. Hey, Karen. Much more focused on the market. Will I be able to attend church? Well, Keith, I think I made the announcement about Moody there. That's good. Dr. J, good to see you, sir. Will the vaccines work? Certainly hoping so. I see C. Jerry, good to see you. Will the vaccines work? Get us back. Brian, good to see you. Nellie, good to see you. Focused on the market and this sell-off? Well, we will be covering that, folks. Looks like it's a mix here of the markets and the vaccines. Again, this is the next to last episode of our first season. We've decided to call these seasons. Next week on this day will be the 1 year anniversary. So March 12th, I went live last year. It'll be March 11th, next Thursday. I've got 2 guests. I'll tell you about those later on. And then in our next season, I've got some new material, new segments that I'm going to introduce. So stay till the end of the program and you'll hear about that. Good to see here. And Deb chimes in. Yes, the vaccine's going to work. I think so. I'm feeling pretty good about it. I'm just seeing enough good data. So from Tommy, apprehensions, what long-term side effects? And it is true. We have no idea what could happen in 1, 3, or 5 years down the line. No way to predict that. We didn't know that when many of us, and Tommy, you'd be too younger to remember this, but Nellie, you were, and others on the call here, were in line for the polio vaccination when we were 5 and 6 years old, and we survived that. But we didn't really know at the time what the long-term effects could be. Again, life is about managing risk and possibilities. I think the risk is greater to not have the vaccine. That's why I've decided to get it. So appreciate your comment here. Work at a mega church. We've discussed having in-person services this last year. We've been having. Okay, so Nellie's in Georgia, and that could be one reason. For the Moody Church in Chicago, it's a different environment in Illinois than Georgia, and for them it's a pretty big deal, but they're reopening for Easter. So let's get to the world economy. All right, a lot of going on here, guys. I know. Now, this is from today, okay? Normally, I'm 1 day behind, but I wanted to encapsulate this because I didn't want to make it look any better. The Russell's still up 8.5%, a little more than 8.5% on the year. The NASDAQ has turned negative. S&P just barely over break even. Dow's up a point. But guys, these numbers are way down from where they were just even 3 weeks ago here. Reminding you before I show you the performance of our portfolio, for those of you, we do have some new people online, okay? So our investment philosophy. So those of you that know me. Those of you that don't, I am a registered investment advisor, so I manage accounts for people. Everyone that's in our management programs is trading 1 or 4, up to 4 of the 4 programs that I manage for our family office and my own personal retirement and trust accounts. So that's how it works here at CB3 Financial. Many people on these videos watching tonight are not clients. We welcome both clients and non-clients, okay? But it's important that you understand my philosophy because that was one of the questions from last week, and I'm going to address that tonight. But just as a reminder, our philosophy is to periodically evaluate the 11 S&P 500 sectors and the industry groups and then select leading stocks from these leading industry groups from the leading sectors, okay? Pretty obvious word there is leading. We're not value players, okay? Then we invest with very few exceptions in this methodology. We want to participate in the momentum and invest where Wall Street is bidding stocks higher. Thus, we and our clients want to share in that wealth generation process. That's really the essence of it. Now, full disclaimer, this data is a day old, and the reason for that is because Interactive Brokers does not publish performance until midnight of a trading day, so there's obviously no way I could get that tonight. So you need to cut these by about 20%. It was a pretty bad day today. So, but still CG for the year positive. SG really strong. Even if you cut this down to 6.5%, 7%, you're right there about where the Russell is, and certainly better than the NASDAQ, the Dow, or the S&P. And then DG, our most conservative program, still positive on the year, and glad to see that. So I put this chart in here for perspective. Those of you that have been listening to me for quite some time know that one of my favorite words is recency bias. That's actually two words, but favorite phrases, okay? Recency bias. That means that we as humans have a tendency to make judgments and let our feelings motivate us in sometimes negative ways based on what has happened recently. And what has happened recently in the last 5 to 8 days has not been good in the market. And thus you see those red bars. But I have those highlighted here in yellow, and I'm going to ask you to look back in September and October and see basically the same behavior. Now, what you're seeing here is the NASDAQ, because one of the viewers said, you know, you keep talking about the S&P 500. How does it look on the NASDAQ? The NASDAQ's been beat up worse since October, and that viewer is correct. So I decided to show the NASDAQ tonight. But both instances back then and even now, basically the market, the NASDAQ, is holding on to its 20-week moving average, although it did dip a little bit below it, and still a little bit down overseas right now. We'll see how this plays out. It has not changed my long-term thesis that we remain in a secular bull market, and I have reasons for that. And I actually want to jump in here with one of the questions from our viewers. By the way, kudos to this viewer. This is a really thorough question. You guys are welcome to send me questions during the week, and if I can get to them, I will, okay? So on February 20th, you tweeted, first of all, thank you for paying attention to my tweets, that you see the S&P topping 10,000 by the end of the decade. Prospects for recovery from the COVID recession combined with the above average earnings growth carried over from the pre-COVID economy, again, very well thought out here, appears to assure the continuation of the bull market for the near term. So we agree. Okay, however, all right, in my mind, it's the low interest rate environment which has more than anything to do in the strong support for the earnings multiples that we're currently seeing. And I agree with that. There are two acronyms that come into play here. That's TINA and FOMO. And no, those are not the names of my granddaughter's babysitters. TINA is there is no alternative. FOMO is fear of missing out. Okay, those are acronyms for why sometimes market momentum gets a little carried away. People see the momentum, they're on the sideline with cash, or worse, they're shorting the market, and they jump in. TINA, there is no alternative. Bonds is not a reasonable choice, and I'm going to get to bonds a little bit later on tonight. So with the spendthrift fiscal policy we're seeing out of Washington, I, the reader, can easily see interest rates and inflation regression to the mean over the medium term. So we agree on the short term, but that's what he's seeing on the medium term. And if you remove that support, even if earnings remain strong, this could provide significant and perhaps insurmountable resistance to my S&P goal. And that is true. That's also 9 years in the future. I realize that there are all kinds of obstacles. If it was a clear, obvious path, everyone would be on it. There's another great book that says that the path that's narrow is the one to take. And I realize that I may be in the majority that this is a secular bull market. But even with the market activity that we see the last few days, with the recency bias, I see enough happening. And we're going to get to the economic indicators here in just a moment. When I see these economic indicators falling away, then I will be open to changing my thesis. But for the low interest rate, for the strong economic indicators, for the earnings reports, which again is part of this next segment, I'll maintain that I still think we are in a secular bull market, and we have many things going for us before a low, in addition to, I should say, a low interest rate environment. Outstanding question, guys. Please keep sending them, okay? So I think I clicked here without meaning to, but here we are. Since 1920, so we're looking back 100 years, guys, The S&P on average has recorded a 5% pullback 3 times a year. That's every 4 months roughly. A 10% correction once every 16 months. And a 20% plunge every 7 years. That's pretty accurate data, guys. So it does not surprise me. What you saw on the chart that I showed you earlier is really within the statistical mean. This pullback that we're seeing right now, the market was in many ways overbought. Now, you might be saying, well, if it's overbought, then why don't you just sell? Okay, if I know exactly the point where there is not another buyer. You see, markets stop going higher when there are no more buyers. And in fact, when the last person has bought, there's nothing but sellers. And that's the end of a particular bull cycle. But again, I don't think this is a cyclical bull market. I think it's secular. So we will have cyclical bear markets within this. I don't even think we're there yet. I think this is just a vanilla flavored correction for stocks that were overbought. I'm looking at this as a teaching moment for some of you guys and basically as a reminder for others, those of you that maybe haven't watched the show that much. But what this means is stocks can go up at a huge clip. You've probably heard the phrase, stocks go up on a stairway and down in an elevator. This is not the time to panic. And in fact, it's never the time to panic. Because as Warren Buffett has said, people want to buy when there's blood in the streets and they want to sell when the world is euphoric. They usually do just the opposite. And that's because emotions, which serve us so well in most aspects of life, are terrible tools to use when investing, okay? That's my 2 cents and my methodology, all right? Feature stock of the week is Zoom. You guys have heard me talk about this. Zoom actually, look at these earnings. It's just amazing. Now, have they sold off during this? Absolutely. They're one of the high flyers. They're one of the pandemic stocks. Do I think that just because now the vaccines are getting out there and people are getting vaccinated and we're going to maybe be going to church on Easter and going to concert. I'm hearing outdoor concerts all over the place this summer and indoor concerts and plays starting in September and October. I think that's great. Has the proclivity of the American public changed? That's what we don't know. I think that there's still going to be a lot of meetings on Zoom, and that's why we continue to hold Zoom in 2 portfolios. Economic indicators, these are the ones that I promised you about just a few moments ago. Why are these important? Because when these start heading south, then I change my investment philosophy, but they're just not. They're just not doing it. Quarterly GDP estimates, you can see China, UK, US here, still positive. Okay, we came out of really bad quarters in 2020 and first quarter this year, UK is still predicted to be negative, but we're not. Second quarter positive, third, fourth quarter, there's plenty of room for growth there. ADP employment. So once a month, when I do this program, the unemployment report is tomorrow. So you're going to see what the Feb unemployment numbers were. But the Wednesday before that Friday, and then I'm, of course, the day after that, you get these numbers from ADP. So both small, mid-size, and large companies added employees, and that's a great thing. We've been seeing this data, but here's the actual ADP monthly data. ISM manufacturing, positive, back to basically 2017 levels, arguably higher than anything back to 2005. So this is manufacturing, meaning this is a corporate data point. Remember GDP, right, guys? In the U.S., 3 components. There's the individual consumer, there's government spending, and there's corporate spending, business spending. And this is a business datum, and it's positive. I like it a lot. The manufacturing prices, this is a subset of the data that I just gave you, just spiking here. Okay, what do you see there? What's the letter of the alphabet that you see there? Those of you that are new viewers, you won't know what I'm talking about. But if you guys have been watching me for any time at all, you know that this is a V bottom. V bottoms happen in price charts, they happen in data charts, they happen all over the place. And basically it means a rapid change of direction, in this case, a good one. We like seeing this. It's positive for the economy. Factory orders increasing the 9th consecutive monthly increase in factory orders. That means people want widgets. So the factories are gearing up and making widgets, okay? The key takeaway is that it showed yet another increase in business spending. Remember, 3 components of GDP: business, consumers, government. We want businesses to see, a need to spend both on employees, hiring people, and on widgets and manufacturing, okay? Orders are up 8.3% year over year. So that's looking back a full year. And remember, guys, in this year that we're looking back, we're in a pandemic. We just got out of the recession, the very short-term recession that we had, 2 quarters basically, just earlier this year, okay? All right, so personal income grew at 10% in January. That's what people are taking home. Second largest rise on record. And spending rose 2.4%. So you're saying, well, gosh, people took in 10%. Why did spending only rise 2.4%? Well, there's a reason for that, and we'll get to that. But if you look at this attribution chart, so this is from Fred, and no, the last name is not Flintstone. This is the Federal Reserve economic data. Okay, it's showing that this income gain came from government support. So I know that. I'm not being naive here. A lot of this is coming from the checks. But that doesn't mean that people aren't spending them. It does put money into the economy, which is, of course, the whole plan. It was during the Trump administration, and the Biden administration is continuing that plan. But people are also hoarding cash. They're not freely spending. And they may be concerned because of their employment situation. They may be concerned that we're going to go into another lockdown. Basically, in my opinion, they're afraid of what the government's going to do to their freedoms to either work, to get on a subway and go into a city and work, or they're concerned that there just may not be a job there. So they're hoarding cash. And in fact, if you look at those major countries on the lower graph there, you'll see the U.S. at the top. 7.2% of all savings are being hoarded. I think this changes when you have more states like the ones I showed you at the end of the first segment, where they're saying, okay, no mask mandate, nobody's staying home. You can if you want, but businesses are open. Businesses are open, no limitations. The folks, it's got to happen. We've got to get this country open again. There are risks. I went to go see a friend in Alabama last weekend after the show. And on the way home, there was a horrific accident. I mean, bad. We were there for an hour and 15 minutes, dead stopped. Okay, we finally got up to the accident scene. There was a tractor trailer turned over on fire. It just destroyed a tractor trailer, which had blocked the whole road, apparently. And I'm sure there were fatalities. And it was tragic. But I kept driving, and I went out the next day and got back on the road. I understand the risks. I'm glad I wasn't in that accident. But I'm not going to change my entire lifestyle because of an obvious statistical occurrence that happens in the automobile driving environment. There are accidents. There will be illness and there will be fatalities from this pandemic. But I do believe that we're over the hump. Okay? So sorry, I'm speaking strongly tonight about my opinion. It's not just individuals that are hoarding cash. S&P 500 sitting on piles and piles of cash. This is yet another reason why I'm bullish. They have to use this money. Just like if you guys were to give me $100,000 to invest and I invested $5,000 and you get your statement and go, didn't I give you $100,000? Yeah, well, I've got 95 in cash because I'm just, concerned. Well, that's not what you want to hear. You're wanting me to be wise and invest prudently for you, okay? Companies need to be doing the same thing when people buy stock. I tell you what, if I found out that I was buying stock in a company and they were using their earnings to do nothing but just, repurchase stock or let it sit there in the treasury, I wouldn't be happy about it. So this money is going to get to work. It's going to get to work. And as all of these factors and this data comes out, the CEOs of the companies of America are going to say, it's time to put this to work. And when that happens, you'll see yet another leg up in the strength of this market. I really believe that. So S&P Global Ratings updated their sector recovery. Now, basically, these guys are pretty conservative. They think it's going to take until well into 2022, some cases 2023, to get us back to where we were credit rating wise in 2019. So this isn't them predicting the strength of this recovery. This is basically saying we know that credit ratings of companies have been damaged. But my experience in the last year has been most investors are just blowing this off. At least at the high level, Wall Street, institutional investors are going, well, we understand that the credit ratings are low. We're not going to pull our investment. We understand why the credit ratings have taken a ding here. So I need to report it to you. JP Morgan and Standard & Poor's put out this data, but I'm just not concerned about it. ISM Manufacturing, mentioned this earlier, going back to December because I wanted to show you the jump from 58.7 to 60.8. As I mentioned earlier, Feb marked the 9th straight month. Why am I showing you this? Because the key data point here is that all industries reported paying higher prices. So it sounds like inflation. Guys, we need to have a little bit of inflation. If you don't have any inflation, your house is going to sell for the same price in 20 years, okay? What we want is controlled inflation. In fact, one of the Federal Reserve's mandates is full employment and controlled inflation. Their target for inflation is 2%. That's a great number. Not 6, not 4, but 2% inflation. When the country gets kicking here and gets fully back to work, I think you're going to see inflation tick up a little bit. I am not concerned about it being an issue because, again, there's still reticence. I always end the segment with this chart. You guys that have been watching me for the last year know it. I follow this pretty carefully from Reuters. What percentage of the S&P 500 has reported? Well, about 95%, okay, 479 companies out of 500. The beat rate, look at the number there in green, is 80%. What's the average? It's been 73. Now, I know you guys have been following this since January. Yeah, it did start out about 90% and it's been dropping, okay? But that happens as more and more companies report. If we finish this quarter with an 80% beat, when the average is 73, guys, that's a huge success coming out of this pandemic. It just is. And again, why do I still continue to believe the S&P is going to be at 10,000? If that viewer is on the line, it's because of data like this. When I add all of this together, plus the low interest rate environment, this data, if you will, is backstopping. It's backstopping the fact that, yes, we've had low interest rates, but we're not totally reliant on those low interest rates for success as investors, okay? Last week, I asked you these 4 questions, and I wanted to know what you guys came in, and we tallied this up. So 18% of you wanted to know why I choose the stocks I do, B, how I decide when to buy and sell. So slightly different question, but that's 83% of you want, that was your answer. C, just a small number wanted to know about bond assets. And so I'm going to cover that right now and then still want to know more about crypto. I'll get to that in just a little bit. A lot going on here in this show. Okay. I want to just take a second and look in the chat. See if I missed anything here, guys. I'm sorry to be motor mouthing. Good comments. Cubs and Sox asking Mayor Lightfoot for 30% opening day attendance. That's great, Keith. Thanks for mentioning that. And I sure hope that Mayor Lightfoot agrees with that. Those are you that are not from Chicago. Okay. You don't remember the polio? That's right. Yeah, because Nellie was not from Fort Pierce. But those of you that lived in Fort Pierce, Deb, you're online, that took the polio vaccine at I guess Delaware School right there on Delaware Avenue. So yeah, and we live to tell about that. So when will we be declared with herd immunity? I don't know. It's a great question, Larry. I'm following that. Herd immunity, Chris Breitenbach, if you're still online, you want to respond to that. I know you've had some research on herd immunity. Everyone else can get the vaccine and I'll be fine. That's one way to look at it, Nellie. Okay. Andre, yeah, okay. And Andre, you've had COVID, so you've got some experience there. Best book, Truth, Nelly. You guys are talking to each other here. This is good. You don't always have to talk to me. You can cross talk here. I'm with you. I think Zoom's going to continue to be used. We use it. I know lots and lots of people that are. Okay. What else do we have here? Yes, open business just as roads are open, but wear a seatbelt, wear a mask, save yourself. I wear a mask everywhere I go. Okay. I don't have to. I go to church and used to be everybody was wearing the mask. Now, not everybody, but I am. I'm just comfortable doing it. And I probably still will for some time. Actually, I got a really cool mask that has music notes on it and stuff. So Okay. All right, guys. I didn't get the hang up here. So let's deal with bonds. Okay. So I had another question. It's from the same viewer. So I'm going to encourage you guys, send me these questions. Same viewer, he said, you indicated that you're not a fan of bonds. You've mentioned that in several times in the last couple of weeks. I bet I have. I've always believed, as reflected in my now ancient financial textbooks and in my current holdings, that bonds and other fixed income investments are an appropriate alternative to equities in a balanced portfolio. That's the operative word, balanced portfolio. Briefly, what am I missing? Okay, two things. First of all, thank you for such a well thought out question. Please send these in, guys. These are helpful. So why am I anti-bond? And it's right here on the screen. So the current yield on a 10-year treasury is about 1.5, actually ticked up to 1.6 today. Inflation just under 1.9. So do the math on that. What's the real return of that bond? The real return after inflation is negative. Negative. Okay, if the bond were to actually go into negative yields, which is what's happening in Europe, it's even more negative. Okay, even if you find a corporate bond that's yielding 3%, if it's grade A and not, even double A or single A or single B, but not junk bond level, even if it's a 3% bond, even after inflation, it's a 1.2% yield. Is that a good use of capital? If you're going to get a 1.2%, why even take the chance in the bond market? Just go find a CD, shop super carefully and find a 1.1% CD. So we don't trade balanced portfolios at CB3 Financial. We used to. I did in my early career. I just didn't find that it made sense once bonds traded at the level that they're trading right now. Obviously, if the yields are this low and the price of the bonds is high, where's the risk when prices are super high? Many people on this call do not remember the last bear market in bonds, and that's because it ended in 1980. We're talking 40 years. Bond cycles take much longer to develop than equity stock cycles, okay? I think there's tremendous risk in bonds. If you want diversification away from stocks, do it with cash and cash instruments. Do I hold some bonds? I held no treasuries. Do some of our clients? Yes, in the GI program, we do have a corporate bond ETF, and there have been times when I have used junk bonds, HYG, and others, JNJ. Right now, I do not hold any. I do not believe it's a good investment. So good question. Thank you for asking. I'm not alone in this. This is the exodus away from treasuries. So look back in 2008. Money was pouring into bonds. Why? Because you could get 5.5%, 6%. Okay, the long-term 100-year return of the S&P 500 is about 6% in real returns after inflation, including dividends. So if you can get 6% on a bond, why take the risk of the stock market? There are a lot of people that think that way. And you can see on the chart that once bonds, people started pouring into them, what happened? Okay. Then the prices start going down. When the prices reverse, the yield comes down because remember, price of the bond, yield work inversely. All right. So we're to the point now where people are just piling out of bonds because they're too risky. That's the key reason to answer this, viewer. Great question. They're just too risky. Well, bonds don't move as much as stocks. They still can move. And there's two risks. There's price risk, there's yield risk, there's really three, and there's opportunity cost, okay? Because you put money there that could be put into something better, okay? That could be more beneficial. U.S. housing market, I hope I'm not running too long tonight, guys. A lot on the agenda here. This spike that we're seeing just over the last 2 years, look at this residential market just pull away from the non-residential market. I don't know when in the next decade we're going to see non-residential real estate investment trusts, commercial real estate catch up with residential. I just don't see it happening, guys. Total construction spending in January, 1.7 month over month, which means, from last January, pretty strong. Key takeaway is that both strength driven by gains in both private and public construction. Just because it's public doesn't mean that it's not, a huge builder like Toll Brothers going in and, doing a major housing development too. I don't think there are going to be a whole lot of office developments, although I'm seeing, in both San Francisco and New York, people going back to work in the corporate entities. A lot of that to shake out, guys. A lot of that shake out. Not an area I'm interested in. If you go back farther before 2008, you can see non-residential and residential tracking pretty closely here. That fell off dramatically in 2008 because of the market crash then and the recession then. And now residential just totally pulling away from non-residential. That's where we want to be. And here's why. Look at these cities now, and they're not all in the South. So Austin, Atlanta, yeah, but Washington, Cleveland, Chicago, there are no houses out there. Those of you, if you missed it 2 weeks ago, I interviewed rockstar realtor Susan Thetford here in Nashville. Been here in the business 35 years, lived here her whole life. Go back and watch that interview. There's just a dearth of inventory all over the U.S., guys, all over the U.S., and that's affecting things. So in a rare development, each state awards one realtor the prize for bringing in the most new sales in a given state. In a very unusual development, the state of Florida has awarded the Realtor of the Year to Andrew Cuomo, the governor of New York, for bringing in the most real estate in the state of Florida. All right, guys. All right, here we go. In our random data, this is a new segment, but I want to show you things sometimes that don't just, fit in a square box here. A letter sealed for centuries has been read even without being opened. So this is laser and infrared technology that they're using to be able to read and decipher data on ancient documents. And I think this has lots of use for healthcare and engineering. I'm watching this again because as your investment manager, we're looking for new technologies that can be used, and we want to catch them early in the cycle, not when everybody else is piled in, but not when they're just barely emerging. So I'm following this trend. And those of you that are clients, I thought you might want to know that. And if you're not, you might want to just know it for your own investing. Okay. All right. So I know we have some options traders online, one in particular that I know, and I'm just pointing out that options trading is just through the roof. Since the pandemic. I think that's because people are staying home. That's part of the reason why we have the volatility in the market. It's an extension of the whole Robinhood situation with GameStop, et cetera. But, it's all about the Wild West, and the American stock market is the deepest and richest in the world. Baby bust. I had a feeling we would actually have a baby boom, a next baby boom with everybody staying home and, maybe just spending time together, so to speak, but that has not happened. Australia, Belgium, France, Hungary, Japan, not sure about the US, but I thought this was an interesting data point, okay? And finally, artificial intelligence. Now, that's a really interesting area for me to pursue. There's so many different branches of this and how it can be used, but it's China versus the US, the two biggest economies in the world. I would like to think that the U.S. is going to use it for advancing not only the lifestyles and safety of Americans. China has a little different take on this. It probably won't surprise you. Not sure I would feel safe with China gathering my data, and maybe you'll see why.
现在2号机是锁起门的。对，就是这个。
Well, let's see how long it takes you to find me. Thank you very much. Let's go.
我们可以追溯到说，出现每一张脸都可以对应说他的身份证，以及他所经过，比方说在过去1周，我们回溯他的行经路程，我们也做了像人和车的匹配。那同时在人上匹配还包括亲属关系匹配，然后是你经常接触人员之间匹配。就是当摄像机布到或者我们传感器布到一定密度的时候，其实 我们会经常知道你跟谁经常在一起。
Well, here we are then. I've just got out of the car, close to the city centre, and for the purposes of this exercise, the plan is for me to start walking in the direction of the bus station. My image has already been flagged to the authorities as a suspect, and in theory, it should only be a matter of time. So already on this bridge, I can see 1, 2, 3 CCTV cameras. Of course, there's no point hiding from them. Just keep on walking.
可以呢，不一定非要从门里头通过，他就站在。哎，对，就是这的，就是这的。有没有看过？对，就是这的。
Uh-oh. Right behind me, you can see just over my left shoulder there. Hello, guys. I've been expecting you. Maybe these guys aren't in on the joke.
那么对平民老百姓，是老百姓需要帮助的时候，我们才会录入这套系统。那他不需要帮助的这种情况，那么我们是不需要采集他的信息的。那这种信息只是在我们大数据里面有他的信息就行了。那在什么时候使用，是根据我们的需要来做这项工作的。
If you have nothing to hide, you have nothing to fear.
对，是这样。所以说，老百姓应该。
If you believe that their citizens have no reason to worry, I've got a bridge in Brooklyn that I would love to have you invest in. Okay. I'm real interested in AI. I'm sure you guys are as well. The Chinese are going to have a different take on their ability to use it to assist their citizenship than the U.S. is. And I'm very interested in this, and I'll get to this more specifically as we wrap up the next segment on going forward with what our topics are going to be next season. Let me go back in the chat here. You guys are real busy tonight. I appreciate this. As far as been declared on the herd immunity, Nellie had an answer on that, and so did Chris. Appreciate that guy. We definitely agree that Zoom's going to be used. There are many people that, my son has a job. He's never even met his boss. He's been at the job for months and months because they meet on Zoom, and lots of company meetings on Zoom. More risk from driving than from COVID, but as Keith said, we're going to need bigger bumpers. You guys have better one-liners than I do. I need to start saving these and using them. So, all right, what else we have here? They say mid-April for herd immunity. Yeah, that could be, Martha. We'll see. Let's see. Sufficient population, but no number that I've seen. And that's, I think, what we're sufficient population to protect the mass population, but no number's been assigned to that. We'll see if that starts being published over the next weeks here. Chris saying we might have 29 million documented cases, but it could be 8 to 10 times higher than that, 8 to 10 times higher than that. If that's the case, we're probably already there. We'll watch for that as the vaccines start to penetrate society here, basically. Again, by the end of this month, we're supposed to have more than a third of Americans vaccinated or at least available for that. So I like the line about Austin awarding Gavin Newsom. Sorry if those of you don't appreciate these jokes, but there are some governors that are driving people to states. I think that Jay Pritzker from Illinois is driving some people to Nashville here in Tennessee. So anyway, good comments here, guys. Good comments. Started the segment a couple weeks ago. Stories from Our American Stories. I don't memorize this, so I'm grabbing this story here. This is a supermarket where basically they ran out of electricity. So we're still following the Texas story, and this will be the end of it because obviously the Texas utility thing you guys may be getting tired of. But I'm showing these just because, we're kind of dour in America right now. And I'll speak for myself. We just see so much bad news. And when you see a story like this, you go, yeah, this is who we are. This is who we were after 9/11. This is who we were when we were rallying behind our country during very positive things, And I'm seeing this even as COVID rages, even as the stock market sells off and other negative things. So what happened here is this this grocery store was not able to process credit cards. So people were there, you know, they had lost their electricity, whatever. And the store just said, you know what, just take your stuff and come back and pay us when you can. So this is an H-E-B grocery store in Leander, Texas. Okay. And, you know, Hennessy put it up on the, this is a guy named Mr. Hennessy, put it up on his Facebook side. Then obviously people started streaming into the store, but H-E-B said, you know what, you know, it's pretty good for publicity and it's just pretty good for humanity. So, you know, we're going to do this. So many shoppers are saying, you know, this really helped us because we didn't have cash. We're used to paying for everything with credit cards. Power went out and they were there for us. So you've heard the phrase paying it forward. These are the kind of stories that I love to share with you, and I'm going to keep doing them. Part of the reason that we invest is not only to make America better, obviously to make our pocketbooks, our own financial situation better, but to contribute to the American economy and essentially to contribute to the American life. I think that's a good thing, okay? And when you see stories like this and you feel optimism, then when you see negative news, your brain has this as a reference point in the whole debit and credit thing. Forgive my financial, you know, accounting, debit and credit. But you're going, yeah, this is bad. But you remember that story? You know, I feel really good about that. I'm not going to let whatever's happening right now get me down because I'm still seeing humanity come through in a clutch. And guys, I think that's important to see. That's why I'm going to keep doing these stories. Okay. So, of the answers, I gave you the answer on the bonds. The next most checked question from last week was cryptos, okay? And this same viewer had a crypto question. So you guys taking feather out of here. So I've spent, this is a third question here from this viewer. You have spent some time, quite a bit of time, discussing cryptocurrencies. I'm not a big fan for a variety of reasons. My question, however, is more direct. Do you hold any cryptocurrencies in any of your CB3 portfolios in which I'm invested? Or do you intend to invest any portfolio funds in cryptocurrencies? In other words, do you have any now or are you going to do any in the future? So the answer is no and no. I personally invest in cryptocurrencies. If you go back to Monday night's show, I actually gave you guys an update on my portfolio. I'm not doing it tonight because there's so much to cover. Yes, it is true that I basically quintupled what I started with in September, so in a half a year, less than half a year. But that has not been without enormous risk. Enormous, meaning drawdowns of 25, 35%. Never had a 40, but 35. That's a lot. Now that's in stocks. You know, you saw the data that I gave you earlier. 20% drawdown happens every 7 years. In cryptos, it happens every 7 days. I mean, you can have a 10% drawdown every 7 hours. It's just the wild frontier. And I understand the risk, and I don't have a massive amount of my net worth in them, but it's substantial because I want to feel the pain when it goes down. So no, I've never invested in cryptocurrencies. Part of the reason is it's just totally inappropriate for retirement accounts. And part of the reason is because it's still largely unregulated, and I just don't perceive that as wise. Are we talking about offering a crypto program? Perhaps. We're actually in discussions with another trader friend of mine named Mark. And when he's got more to show me, I'm going to tell you about his program. It's pretty exciting. Okay. As far as whether I'm going to offer it, I don't know. Probably not, especially if I can find other people out there that are really doing a good job on that. So you want to know more about crypto? I've decided to make this Crypto Corner is what I call it, every week and every Monday and Thursday. Okay, I'm running long, guys. I'm sorry. I'm going to do my best to pick this up, but we've had some really good questions tonight. So Bitcoin had a really rough patch here. But, you know, it hadn't been this bad actually since, you know, early 2020. But again, look at this volatility. If you look at the, standard deviation, which is a techie term, but it's way worse on Bitcoin than it is on even Tesla or NEO or some of the more crazy Fizzler for Solar. It's just, you know, Bitcoin's in a lot more crazy asset class than that. So Bitcoin dropped down to 43.5, traded back up to 50,000, literally in just a matter of 72 hours. We're in it. We are diversifying away from Bitcoin into the other smaller alternative coins, as we call them. And I'll keep updating you guys every Monday and Thursday on what we're doing here. But we're paying attention to this because Bitcoin has become a $1 trillion asset. It took, the $1 trillion club's, nothing to sneeze at. Look how long it took Apple, Amazon, Microsoft, Google, okay? Bitcoin got there sooner than all of them, just a dozen years, okay? Jack Dorsey from Twitter, invested $170 million since I met you last week. Kathy Wood, who's an ETF investor, very positive on it. So you're seeing lots of people come out and, rally around cryptos. All right. All right. So I don't want to rush through this, guys. This is important. So the top two areas that you guys want to know about are why we choose the stocks we do and how we decide when to buy and sell. So I'm going to introduce to you now a new segment for the first episode of season 2. All right. So this is technically the last episode of season 1. Next week is just the anniversary issue of the program because we started on March 12th. We're going to be on March 11th, and I'll tell you about our special guests at the very end here. Okay, but as far as why we do what we do, here's a new segment, American Energy. Now, this is important, really, really important. The energy sector is what fuels America. There are actually 5 fuels, and we talk about this battle between fossil fuels and wind and solar, but there are really 5 different kinds of power. There's fossil fuel, okay, coal, natural gas, oil, hydro, which is water, okay, wind, obviously created by wind, solar, obviously by the sun's heat, and nuclear fission. Now, nuclear has had some setbacks. There are not any that I know of nuclear plants being built, but there are smaller nuclear engines that are built that literally can be transported on an 18-wheeler. Okay, and so we're going to be looking into that. I think you guys are going to be real interested in that in the second quarter. 2 weeks from tonight, we'll start the second season. Why is this important? Many people don't know the breakdown of energy in the country, okay? 63% of it is fossil fuel, 12% hydro, only 7 and 2 for wind and solar. Now, obviously, the green folks want to see that rise. I do too. I'm happy to see that. But we have to work with what we have so that we don't have a situation like we had in Texas ever again. I'm hoping that's a 100-year phenomena, not only for the people of Texas, but for anywhere else in the country. We want to transition to cleaner fuels, but in the meantime, 20% of America is powered on natural or nuclear. Okay, and that's just something that's not talked about. But I'm going to be talking about energy starting next season. I hope you guys enjoy that. And I'm coming back to this slide because people ask me, how do we buy and sell? Is it earnings? Is it technical? Is it fundamental? Is it looking at balance sheets? Do I pour over tons and tons of balance sheets? What other factors? What other risks? Well, my response to that is, guys, I actually focus on risk first. I focus on risk first because the market left to its own, if you can get out of the way of risks, you can become very, very wealthy in the stock market. The key is avoiding risk, not finding the next greatest opportunity because they're there. They're always there. So what are some common risks? Well, there are quite a few on this chart. They're not even mentioning industry risk, which means, a whole sector like energy, which has been hurt, over the last several years. Energy's been underperforming the S&P for over 2 years. Utilities not doing particularly well, but technology, communication services, et cetera. There are various asset classes and sectors that are doing quite well. But our job is to understand market risk. When I taught, and many of you on the call tonight or on the webinar tonight, went to our classes. And I taught those with a guy named Dave. And he and I would get up there and we would say, so what are the risks? Well, we have risk of, a stock underperforming. We have risk of a whole sector being out of favor. We have, industry risk. We have civil unrest, but we also have political instability. And candidly, that is the biggest risk because what gives you the opportunity to make profitable decisions and investments is a stable economic environment. And candidly, folks, we have taken that for granted pretty much our whole lifetimes here in America. And right now, that is at risk. No one less than Thomas Jefferson said a democracy is nothing more than mob rule. This is Thomas Jefferson in the 1700s, where 51% can take away the rights of the other 49%. John Adams said, A republic is a government of laws, and that's what we have here. People think, well, this is a democracy. Actually, it's a democratic republic. And it's been pretty stable for 200 plus years. I would argue that it is not right now. And that right there is the biggest risk. A democracy, according to John Adams, our second president, never lasts long. Okay, it wastes itself, it exhausts itself, it murders itself. This is, again, 250 years old. Because there was never a democracy that didn't commit suicide. Well, I don't want that for this country. I don't want it for myself, for my children, my grandchildren. And I certainly don't want it for our investors. Okay, our biggest risk is not balance sheets. Our biggest risk is not that Tesla is going to blow an earnings report. Our biggest risk is not even that, the energy sector or anything else, consumer staples, is going to underperform the S&P for a year. We can deal with that. But when the entire fabric of how we invest in this country is challenged, that's our biggest risk. And I think that's what I need to address for you. And that's going to become a primary segment in our second season, starting 2 weeks from tonight. And candidly, folks, I understand that this may have a political tone to it, but the reality is we are a capitalistic nation. We create incentive for businesses and individuals to make widgets, accrue wealth, to educate their children, to be philanthropic, and to seek happiness, all right? And pursue goals that make them feel like they're contributors in society. And that is in direct contrast with what the socialism economic system of the world is. And I have never in my entire lifetime, until very, very recently, seen that this reality, and we used to talk about this, Dave and I, when we taught our classes, that this is what happened. We'd start this segment and say, so I got this great stock for you, right? It has had consistent earnings for the last 5 years. The CEO's been there 20 years. Great growth, no employee unrest. Does it sound like a company you'd want to invest in? And everybody goes, yeah, it sounds good. Well, what if I told you that it was in North Korea? Oh, then everybody goes, no. Okay, well, how about Iran? Oh, I don't want to do that. Okay, well, I'm not saying that that's what the U.S. is now, but I'm saying that those concerns that we expressed back then, political uncertainty and unrest that threaten our financial, economic, guideline, if you will, those are now creeping into the fabric of American society, guys. They just are. So as your financial advisor, for those of you that are clients, and as your financial educator, for those of you that are watching, trying to learn and understand how to be a good investor, this is going to be a really important segment. And I hope you guys will tell your friends, okay? Tell your friends and be part of that. In politics, and guys, I know I'm running really long. I appreciate you hanging with me. We'll try to be careful next week. Cabinets just not getting selected here. You can see the check marks. And this is surprising because, it's a trifecta in the government. We've got a Democrat president, Senate control with Kamala Harris, being the tie-breaking vote, and the House is Democrat. But they're just not. There's infighting, the Democrat Party, and candidly, there's plenty of infighting in the Republican Party. But, the far left has their agenda, and Biden's not exactly in sync with that. So that's why it's taking a while to get these cabinet picks. If you wonder why I haven't been talking as much about politics as I did in early January, that's one of the reasons, okay? Now, I just want to be careful to say that I wouldn't have chosen this language if I were Kevin McCarthy, but he's the whip of the House, okay, the Republican whip. My concern is the actual chart on here, and I thought about just showing you just the chart, but this is what he tweeted. As an American, all of us should be outraged that if we're going to, rack up $1.9 trillion in this benefit, if only 9% of it is going to COVID, something's wrong with that. Now, obviously, I've got to spend some time digging into this over the next couple weeks so that I can get a better explanation of where this breakdown is. But if I'm going to commit my portion of $1.9 trillion to fund this bailout package, I at least would like 85 or 90% of it to actually go to COVID relief and individuals and companies that have been hurt by this. I'm not really interested in a lot of the things on the right side of the chart. You guys can make up your mind on that, but it's your tax dollars. Okay, you ask how I make decisions. I make decisions based on stability in the environment that allows. Think of the three little pigs, okay? You can invest in that pig that built the straw house or that built the house with the bricks. Okay? I'm looking for houses with bricks to invest in for you guys. And a lot of that's influenced by what is happening at the federal level right now. Okay? All right. You've been troopers. Thanks for hanging in here. I mean, you can just see the spending is just crazy out of hand here. Look at the spending in red and the revenues. That's the tax revenues. It's got to be dealt with. So last question for the night, and then I'm going to go back in the chat here. Again, I know we're running long here, but you guys are dialoguing with each other. I love that. Okay. So what is your biggest concern in 2021? A, are the vaccines going to work and get us back to a safe and healthy USA? B, is my portfolio safe as possible? C, is inflation going to cripple us in 21? Or D, my main concern is, and fill it in. I'm going to use this 20 seconds here to go back. Let's see. Tom Z. Did I miss a question here? Let me see. We need herd immunity from government control. I like that, Andre. Oh, gosh. It was actually Roebling's wife who learned engineering and finished the Brooklyn Bridge after Roebling and his son died. Thank you, Dr. J. Dr. J is a civil engineer, and he would be the only one on the call that knows that datum. Thank you. Herd humanity percentage is 67%. That would be 2/3, Chris, just like the number of senators needed to impeach, right? All right, Leander, just north of Austin. Herb's the largest Texas grocery chain. Yes, so think of that as equivalent to Kroger or whatever it is. Has one of the 10 largest privately held companies in the U.S. Jerry, thanks for that. Admired locally. I appreciate that information from Texas. I think you're from Texas, Jerry. This week crypto is not so good. You noticed that, Nelly, huh? And yeah, yours play money. I would say it is for me too. Okay. Texas has 2 reactors. Our hometown of Fort Pierce, Florida, still has that reactor over there on South A1A. So coming from the former Soviet Union, Andre, you're sharing something with us really unique here. Truly saddened by the bent towards socialism in the U.S. Well, Andre, I want to ask you to elaborate that on, not tonight, but be sure you're here next week and then 2 weeks from now, because you're going to bring a perspective that, many of us don't have. That would really be helpful. And the bill is ridiculous. Well, okay, that's your opinion, and I hear you. I'm with you on that. The bill's horrible. Blue state bailouts. Okay, we're going to have opinions on here. I know. Tom Z, I'm looking for your question here. I don't want to miss it, guys. Is that it? A for Dr. J. Yeah, the vaccine's going to get us back. Portfolio safe as possible. Nelly, I'm going to keep working on that. Brian C, is inflation going to cripple us? The answer is no. It's not. This is my opinion, Brian, but again, thanks for all those questions. Really appreciate that. Deb, portfolio. Yep, that's why I'm here, guys. Karen, vaccines. Keith, open up America. You bet. You bet. Greg, portfolio safe as possible. Yeah, guys. Hey, Debbie D. With Andre, increased government control, biggest concern. D, Larry. B, Andre. Yeah, he's agreeing with Andre's agreeing with Debbie. Let's have Andre on an interview. Andre, we should talk about that. That's actually a great suggestion, Nelly. Great idea. Because, we'll just do it. And Kay, the debt. I hear you on that. So, guys, what a really involved night. Next week, do not miss Lydia Thibodeau, CEO of Boston and Collegiate Nannies. Can you imagine a job where you have all the clients that you could possibly handle and you can't find nannies and pay them $100,000 a year with health benefits and 3 weeks vacation because there's so much demand that may not be enough to get them in the job? I mean, it's just insane. Lydia's going to tell us how she's handling that after an unbelievably successful 2020, and she's off to challenging in 2021, and a special guest appearance by Tom from Innova Digital. Tom is the one who called me, my producer, on the afternoon of March 12, 2020 and said, you need to go live. I'm looking at this market and I don't even have that much in the market and I'm freaking out. Those people that have more than that, you need to reach out to them. And so as just a heads up, I want to give you guys a little background on Tom, what he's doing with Innova Digital. It won't be a long interview, but it's the reason we're here tonight is because Tom made that a priority to get in my face and say you need to go live. So I always end, as you know, guys, with this quote from 2 Timothy, for we have not been given a spirit of fear, but a spirit of power, love, and a sound mind. 2 Timothy 1:7, it remains my deeply held belief that we will not only survive this pandemic and 2021 in general, we will emerge a stronger people and nation and more affluent. I do believe the very best of America is up ahead. I do. I absolutely do, guys. Let me check the chat here. Thanks for the kind words. Oh, I see you're shy. Andre, you'll be great. We can even pre-record it if you want, okay? And because nobody wants to live in Chicago and Boston. There are nannies fleeing to the South. That's true. Okay. I still think I missed Tom Z's question but if you're there, Tom, and you can type it in, let me know or I'll answer it. But, guys, what a wild night here. Really appreciate you guys being here and listening. Again, we ran about 10 minutes over. Normally try to keep it to an hour. Next week's going to be exciting. You're not going to want to miss it. Tell your friends, tell your family, the 1-year anniversary of CB3 Live. And then 2 weeks from tonight, we begin season 2. And we're going to handle your questions every single week. We're going to handle how I buy and sell, what I think the biggest risks are. Remember, I think we have tons of opportunities, but we need to address what are the biggest risks. That's our show for tonight, Thursday, March 4th. I'm Charles Brown, Portfolio Manager with CB3 Financial here in Nashville. Remember that at CB3 Financial, we don't just manage your assets, we become one of them. From COVID, U.S. politics, the world economy, market sell-offs, and political concerns, to clarity, guys. This is CB3 Live.